All right. Hi, everybody. Bryan Kurey here, head of research at SBI, and we're here to share with you some fresh off the press data that we've just collected from CEOs. Want to get in front of everybody. I'm joined by our CEO of SBI, Mike Hoffman.
Hey, Bryan.
Hi, and also our Chief Revenue Officer, Tony Erickson.
Hey, Bryan.
Hi. So thanks, guys, for joining. So wanted to just share with everybody some data that we've been collecting from CEOs on commercial sentiment. This is data that we collect on a fairly regular basis. But the unfortunate thing is the last time we collected it was in March, right before the big tariff announcements. And so we wanted to get back out there and understand how have things changed. But at the same time, we didn't want to do that too quickly. We wanted to allow the deal environment to settle in and see where commercial sentiment is now. And we went out to a smaller group just for speed in May, and we'll continue to pulse this as time goes on. What you see here is what we call our commercial sentiment index. And just quickly, what this is it's a amalgamation of 5 different data points that we have. And we're going to show you that in a little bit more detail in a second. But just at the highest level, what you see is a pretty significant decline from March to May in the overall sentiment that CEOs are telling us or expressing about the commercial environment. And so, Mike, I wanted to tee up a question for you here, just to get us started. I can't imagine this surprises you, but wanted to see how does this align with what you've been hearing in your conversations with other CEOs as you've been talking about the environment and what to do about it.
Yeah, so it is consistent, and it's interesting when you look at the graph. Yes, you could tie it directly um, to the tariff announcements and Liberation Day, and there was a CEO conference that I was at like the day of Liberation Day, and the drop is driven primarily uh, by uncertainty, just what's going to happen next. And I think had the announcement been, um, this is what's going to happen, and this is how it's going to look going forward, and that's it. There will be no other changes. But I think some of it is driven by the uncertainty that came out of it. And I think we've seen drops like this in the past. If you go back to when interest rates started going up significantly in the back half of 2022, that created a different type of uncertainty. Wars breaking out in the Ukraine, war breaking out in Gaza. So there are these series of uncertain moments, but this one was big. This was a big uncertain moment.
Yeah, for sure. And that uncertainty is starting to play out in just the buying environment as well. So it's not just in the where are things going to go, but also in the buying decisions that people are making on the other end as well.
Right. The buying decisions are are hindered a little bit by the uncertainty. Then in addition to that, you had displacement of a lot of government contracts, and so now you've got sellers that are racing to make up for that revenue in other areas, and you get, you get this competitive environment, or hyper competitive environment. So there's a lot that's driving this.
Yeah, for sure. And so I'm going to click in just another layer here into what I like to call it as the internals, but the 5 measures that make up this broader index that we were just talking about. So 5 things that underlie this. You see them on the screen now: pipeline quality, deal volume, deal size, deal cycle time, and renewals. And you can see there that from March to May 2025, the portion who are seeing this as better than last quarter, declining significantly. And to give you a little bit of historicals on here, but just in general, these are all going down pretty significantly. Tony, I wanted to bring you in here on this one. Across these, where are you seeing the most intensity on these different indicators, from cycle times to deal volumes and et cetera? And is it different at all from what you were hearing earlier in the year or even across last year?
Yeah, Bryan, it's a great question. And kind of playing off on where Mike was just talking on uncertainty, this is a movie that we've seen before. It's a movie we've seen several times in the last 5 years when we went to this thing that we called the new normal that we now just refer to as normal. And, you know, the two that seem to be impacted on a cyclical basis the most, are consistently around cycle times and deal size. When these times of uncertain peak, it takes longer to get a deal done and deals get compressed. And we've seen that time and time again. And it's just seems to be a cyclical thing over the last several years, kind of going to where Mike was, whether it's worries of interest rates, concerns around war, going all the way back to COVID kicked this whole thing off. And when times have gotten uncertain, people have been paralyzed to make a decision. And that's where cycle times continue to elongate. And a few times over the last few years, what has happened is it's unlocked and created a bit of a flood in the second half for many companies. And then there's been other times it became more perplexing and that didn't unlock. So I think that's where we're still seeing the confidence, inversely working against the uncertainty index
Yeah.
because they're running hand in hand because there's very little clarity right now. So I think those are the two things that people are wondering if now is really the time to make that big decision, or am I just going to dip my toe in? So those are the two that we're probably seeing have the most impact right now.
Yeah, for sure. In some of our other research, we call this the zone of good enough decisions, right? So even if decisions are being made, it's not the decision that maybe the buyers even wanted, or certainly the selling organization wanted, but it's the one you can get. And I guess you take what you can get in some cases here.
Yeah,
Um,
I mean, over the last couple of years, and it parallels to cycle times as you would expect. Approval, authority, taking longer to get anything done. Even small things are taking, in some cases, CEO or even board approval to do smaller things. So to your point, it's do you really need it? Can you get by with it good enough because the personal capital that people have to expend to do something that they know might be the right thing just might not be worth the effort. So people will resort back to manual processes or other ways of just trying to get it done and see if they can make do.
yeah,
So it's an interesting challenge that we're seeing across the board.
for sure.
Y- Tony, you bring up it always impacts deal size and sales cycle time. And it's funny because it's human nature that forces this. We're doing it to ourselves as companies. Because what happens as soon as you get uncertainty, you tell your teams you need to go out and get yourself involved in more deals. And then you have everybody rushing to these deals. And what happens? One, it's a race to the bottom from a price standpoint because now the buyers realize, oh, I have 7 people competing for this. And then the deal cycles get longer because if you tell people, hey, by the way, here are 2 sofas, I want you to pick one, right? They can pick pretty easily. If you go, here are 7 sofas, I want you to pick one, it gets a lot more difficult. And so you can make this choice. And the human nature is when things get uncertain and things get a little bit tighter, let's play for more deals. Let me send my sales organization out to get involved in more deals. And let me tell the marketing organization to do campaigns to get us involved in more deals. You can do that and you're going to fight that fight. And then you have another choice, which is where are the deals that we're positioned best to win? And we're going to put our resources and our focus on those and win that set of deals. So, the nature is everybody recognizes this and they run to get involved in more deals. And what do you get? You get longer deal cycles and you get smaller deal size because of competition.
Mike, it sounds like you expect that to continue throughout the rest of the year. Tony mentioned sometimes when we've seen this in the past, the floodgates kind of open up in the second half. Sounds like maybe you're a little more you're not so sure it's going to happen this time because the
Well,
deal environment.
you can if you wanna hold that view that it's gonna get better uh, in the back half of the year, and you're gonna bet the year on that, you can do that. You can smoke at a gas pump too, but it's not what I would recommend. I it I think you need to make the assumption right now that the rest of 2025 is going to be difficult, and it's gonna be a highly competitive environment, and you're gonna have to make a choice of either we're gonna play for more deals to try to win what we need to, or we're going to focus on the ones that we think we can win, and we're going to put our resources on those to give us the best chance to win. But either way, what I'm hearing from CEOs, except for certain pockets, and there are always those pockets that fly above the uncertainty in the market. But for the most part, what I'm hearing from CEOs, other CEOs and CROs, is that it's going to be tough for the rest of the year.
Yeah. Yeah. So Tony, I'm going to give you the last word here. What are the one or two pieces of advice you have for CEOs, for CROs, on how to manage, given what Mike just said and what we're seeing here in the data?
Yeah, in times like these, this is where I think people need to be hyper aware that competition is intense right now, and clients are considering options. The propensity for a client to stay with someone they've been working with, someone they know, versus entertain options right now, that is going down, and people are willing to entertain other opportunities, other offers, other options, depending on the type of product or service that your company sells. So the two things I would say is, number one, you have to control what you can control, meaning you've got to run a flawless process. You've got to expect that there's more competition. You can't become complacent and assume that just because they've used your product or service in the past, they're going to continue using it, because, as Mike said, competition is fierce right now. Things that used to be bake-offs between one or two companies are now 6 or 7 companies, and that is a very common thing. And then the second one is, it is a very tried and true process anytime things dip, is defending your base, or making sure you're actually putting your arms around your active customers, getting your renewals, securing that business. And when you think about how you're deploying your talent and how you're running your business, your operating model, those two things must work in harmony to do those two things. Run a flawless process every time you're in the middle of a pursuit, and then make sure you're protecting your existing clients and fending off the competition that is knocking at their door.
Yeah. Great advice.
Hey, Bryan, can I bring up one more thing? So,
You
Tony,
sure can.
those are great points. I'm going to bring up one more thing, and we can probably do another session on this one.
Mhm.
Is we're looking at this, and we talked about tariffs and the uncertainty that created, and the impact that may be having on deal size and cycle time. But there's another one that's out there that you might want to think about, which is how much of what you're doing and what you're selling is being cannibalized by AI.
Mhm.
And I will tell you from personal experience, there's some branding work and some positioning work that at SBI that I would have spent 6 figures of of expenditure on. I didn't really need to because of AI. And so that might be a different session that we do, but you also have to look at and decide, is AI eating my business?
Yep. Yeah,
And
for sure.
I know nobody's oblivious to that, right? I just said something that everybody's thinking about, but are some of these changes that we're seeing in deal size and sales cycle, and even deal volume, is it coming from piece of your business where you didn't look at it and answer the question to yourself, like, how is AI going to kill our business?
For sure. It makes this moment unique because there's a tension that didn't maybe exist in similar times. Because at the same time that there's just wonkiness in the deal environment because of the macro, there's business model transformation happening all over the place. And so there's that tension of, we want to grow into these new capabilities that we're putting in. We're creating new efficiencies, and the market is really confusing, and really competitive to the point you've been making. So put all that mixed together, and it's a stew that's a new one to navigate for sure. So we'll be looking at this for the next few months, how things are shaping up in terms of what CEOs are seeing out there, and we'll continue to bring this out there. But Mike, Tony, thanks so much for taking the time this morning to have this conversation.
Yeah. Thanks, Tony. Thanks, Bryan.